And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon. Welcome to the Market Recap and the new Limit Up podcast. I am Dan Hodgman.
And I'm Jack Pelzer.
Jack, how you doing?
I am doing great, Dan. Heard you had a rough one last night for Veterans Day.
Well, last night was Marine Corps. We had Marine Corps birthday yesterday. That was the big celebration for me yesterday. And tonight will be a Veterans Day celebration.
Just a couple days of appreciating the veterans. So that's good, Dan. I hope you have a good time.
Oh, thank you. Thank you. So, Jack, why don't you explain what we got going on here? It is this new thing we're doing on Thursdays.
Yeah, we teased it before. So we're going to combine the recap. We're still going to recap the day's market moves and things like that. And then we're going to go into a topic. So today we're going to talk about how we would go about passing the trading combine. That's because we're having a company competition in it, and I want to give them some pointers. But yeah, this will be dropped in the iTunes podcast feed, and if you're listening to it, you can come join us live on YouTube at the Top Step YouTube page at 3:00 on Thursdays. So with that, Dan, I'll let you do your recapping.
Awesome. Thank you, Jack. So let's break them down pretty quickly here, just kind of like we do when we don't dive into our charts. First and foremost, crude oil opens up this morning at settlement price or right on it. Rallies to overnight highs, breaks inside, breaks down to overnight lows. So pretty much a tight inside day there. S&P 500. I don't really have much to say. We broke from 46.50 down to 46.40. Really quiet day. We didn't even make it down to 46.40. It was a really tight day. Hangover galore post CPI yesterday.
Quiet day all around. I noticed like a lot of the names, everything else just seemed like low volume. It's a rainy, cloudy Thursday here, and the markets are just kind of how I feel right now.
It's spot on. I mean, the same thing goes for the NASDAQ. NASDAQ broke from 16,100 down to 16,030. So we had a 70 handle move over in NASDAQ here today since the open. So really quiet there. Gold, I can't even begin to talk about gold. Gold was in like a $3 range all day. There's nothing to say there. Same applies for the euro and the 10-year note. These markets were extremely quiet here today, and really no surprise, in my opinion, after we had this information come out yesterday with CPI. That was a kind of a shell shock, right, Jack? We saw CPI month over month up almost a full percent, 0.9%. That's a huge inflation number there, and 6.2 year over year.
Yeah, that's sort of the new number to look at is the CPI, PPI, all the 10-year yield are all things I'd be looking at trading. Even today, 10-year yields were up a little bit. They're close to 1.6 now. If those continue to rise, that's going to be sort of the harbinger of doom there. So if you're trading equities, anything else, just keep an eye on that 10-year yield. Keep an eye on the inflation numbers, especially as they come out.
I couldn't agree more. I think CPI is the big number. You know, jobs report was always a big one. Fed's always a big one. CPI was never really one we paid attention to that closely. It sat around 1.7 to 2.2%. Really never anything too crazy. Now we're seeing some big time numbers. And they're continuing to creep higher. I think that's the key here. They're not turning inside, but rather they're inching higher. Like we said, 6.2 yesterday. So that's what we had going on here in our markets. But I'm actually excited about this topic we're talking about here today. Company-wide trading competition within Top Step.
Tell them about the format of this competition that's going on.
All right. So this is something historically I've organized within the Top Step company. We do an internal trading competition. So everyone in the company will trade. If they haven't traded already, most everyone has traded in some way, shape, or form. But you know what? We're a trading company. We want everyone trading. So we have a competition going. Everyone starts in step one. We have a little bit more rules around it, a little bit tighter than just regular trading combine. We have max number of trades allotted in a day.
Because we don't want them trading all day.
Yeah, we
Right.
still have, regular jobs to do. Well, some people do. Then there's some of us that don't count. Jack and I, we won't be involved in the competition, but we'll be working with some of the traders, and we're going to do it a little different. We're trying to have some competitive spirit with it. And so it's like sports. It's trading. We use sports as an analogy all the time, right? In hockey and in football, we always did like 30-yard sprints or 40-yard sprints. And the first one to finish the sprint out, everyone goes back to the beginning and starts back over. That's what we're doing here with step one. First person to pass step one passes and continues on. Everyone else has to go back and start over. So it's going to be a little bit of a race. It's going to force traders to, or everyone to put on a little bit of risk, have to manage it, have to find to kind of create some control. It's going to be a lot of fun. We'll see if we can keep everyone updated every Thursday.
Yeah, and just in case there aren't, if there are a few new people here, the goal of the trading combine in step one, if you're in a 150K account, which we're doing, is to make a profit of $9,000, and then you, in the real trading combine, you'd move on to the next level, and then if you pass that, you would get a funded account. In this case, we're given what, 1,000 cool ones, 1,000
Yes.
buckaroos.
That
Go to
we
whoever
are.
can pass step one the fastest. So what we're talking about today is if you're in any trading evaluation or the trading combine, what our strategies would be to pass. So we're not just going to do step one here. I have a few that apply to step two that I want to go over as well. So Dan, without further ado, you have a brand new trading combine account. How are you going to pass it?
So I've been thinking about this question a lot here today. I've traded in the combine. I've done a couple of them in the past. I've done one recently, and you definitely have to think about the rules. You've got to think about the account itself and what you're trading in, right? We all have this vision of what we want to trade, but we really can only trade with what we have. I look at these accounts, and the first thing I'm going to do is I got to go find a product that has a little bit of control. All right. I do trade NASDAQ. You guys all know I've been trading NASDAQ a lot lately. That's a product I'm going to avoid within myself for this trading combine, just because it is a very whippy product. So I'm going to move to something similar to the S&P 500, or lately I've really liked crude oil as well. So I'm going to look at a product like that. I am trading ones and twos. I do trade bigger size some days, but I'm going to try to trade ones and twos, and I'm not looking to catch the big moves. So I'm really going to focus on probably 3 trades a day. And if I can catch an extreme and I can pick up a couple $100 per contract 2 or 3 times a day, I'm going to be pretty content with that.
Yeah. So are you trading NASDAQ mostly because you're trying to get, so the vast majority of our traders are trading the NASDAQ is my understanding. So were you just trying to get into that mind space?
Yeah, a little bit of that. And it's been a fun market. And so I've been dabbling in it from the retail perspective. I think it's a really interesting product. I think it's retail dominated at this point.
Mm-hmm.
I don't think you're going to see a ton of professional or institutional action over there. And so I've traded it quite a bit. It's frightening.
It's whippy, and it's heavily, the NASDAQ 100 is heavily dominated by a few. I mean, I think Tesla's like 6% of that index. I think that adds to its possibility for whippiness, which I don't want here. So I'm kind of with you. I'd probably go back to my roots and trade bonds, maybe. Ooh, the bonds, the crude oil. I like what you have there. So yeah, I would definitely choose a product. I think the first thing I would do too, if I was just getting started, would be to create a calendar with the alerts. I think you can import like a Google Calendar of those, so that you don't want to break a stupid rule in this, because remember, you're trying to pass it. So it's not just making the money, but you got to be flat during certain economic releases. I would start a calendar there, and then I'm with you. I do 1 or 2 lots, maybe more if I'm trading bonds. Yeah, because if you're trying to make $9,000, all right, I was just looking at this the other day. The nominal value of an NQ future is now what, Dan? I won't make you do the math in your head.
I don't think I could do the math in my head, but it's a lot.
Yeah, it's $320,000, right?
$320,000. Okay.
1 NQ future. So if you were trading 5 years ago, 1 NQ future, you're getting more than twice the bang, like maybe 3 or 4. I can't remember exactly how much it's up, But if you're trading like 5NQ futures, that's $1.6 million in exposure, right?
So Jack, real quick, could you kind of explain for those that don't understand, could you explain what you mean by nominal value of this product?
Sure. So the equity indice futures at the CME are defined as some multiple of the index value when they get cash settled. All right. They're not like oil or something where you have to deliver barrels. They get settled at some number. The S&P minis are 50 times the index, and the NASDAQ is 20 times the index. So as the NASDAQ has gone from, just a couple of years ago, it was 5, 6, 7,000, right? So
pretty low.
Yeah. So 20 times 7,000 would be $140,000, which means if you were to actually have the value of the movement, right, your future is moving with the value of $140,000 per contract back then. The NASDAQ's exploded since then. It's now at 16,000, and 16,000 times 20 is where I got that 320,000 number. So each contract you have is moving like you had a portfolio of 320 grand in NASDAQ, and that's one future. So leverage shouldn't be your problem in this. I was thinking like a 1% move on a couple contracts, and there you are. So I would start small. You have plenty of exposure.
Right. And I think that's the key that I've told a lot of people within our company was, hey, right off the bat, don't come out like you have to knock it out the park in the first day. Grow this thing a little bit, create some comfort, create some room. Also, if I'm just getting going in this, it's setting up the charts properly too. I think I failed to touch on that, right? Because charting is a hugely important thing when you're day trading, right? If you're trading outright futures, you got to want to have your charts set up in a way that you can read them. I can look at someone else's charts. Doesn't make a whole lot of sense to me, but I can look at mine and I know exactly what I'm looking at. I get the quick visuals. I think that's going to be really important, is making sure you come in, setting up your charts for yourself, not what someone else does, but what you're looking at. Set it up, and it's all visual too. If you see something when you look at charts and you recognize it, other people are seeing that same thing. That's an important thing. If you can visually see it, hey, you're on the right path within your charts.
Yeah, I've told before, that's the reason I think technical analysis works to some extent. It's more than voodoo, because if enough people believe in it, right? If enough people are looking at the 100 and 200 or 50 and 200 day moving averages, well, that's going to have effect because it's group psychology, and the market is really just group psychology run amok. The next thing I do, this is important. I would select what my daily loss limit was going to be. And I'll give you a hint. It's not going to be the maximum daily loss limit that's allowed, right?
How would you go about setting a personal daily loss limit if you've never actually traded before?
That's a good thought. I think in a competition like this, I would, just because this is more a speed thing, it wouldn't be how I'd run my own account, but I would probably choose 50% of the daily loss limit to be what I allow myself to lose in a day in this competition. But if it was real life, and I was starting, I would probably make that number 25%.
Reasonable.
Yeah.
Reasonable.
How about you?
Well, it all really comes down to, everyone's got a couple days of practice right now. So everyone's been able to practice here yesterday, today, and tomorrow. So I would really determine my loss limit based off of the practice I'm getting, or the little bit of history I've got. If they come in and their average, let's say they're making $600, $700, $800 a day, each day they've traded this week, I'm not going to allow my daily loss limit to be, my personal daily loss limit to be any greater than what I've made this week. That's really how I would do it in this competition. In the grand scheme of things, though, it really comes down to taking a look at what's my average winning day, cutting that in half, and telling that's where my personal daily loss limit's going to be. Never want to risk more in a given day than I'm willing to make. And that carries over from trade to trade, day to day, week to week, month to month, and year to year.
Right. And you're good at that, Dan. That's sort of your superpower, is kind of limiting those losses in relation to your winning day.
Yeah. We've got a top stepper, Holden, currently chiming in right now, saying he hopes no one else is watching us, because this is some good advice. Also, Hello, Tanya, Kevin, and Chris, and anyone out there. If you guys are listening, what are some of the tips? But I want your guys' input too. what are some tips you guys have for the Top Step employees that are getting into this combine?
Oh yeah, or just any traders in general, I guess.
Yeah, any trader in general.
So on that note, we're talking about like size and stuff like that. I think you can increase your size, but I would only do that once you've given yourself some padding. All right, is you're increasing your balance, then you can increase your size a little bit, but still don't go out there and risk blowing yourself out of the competition or out of the combine. There's no resets in what we're doing. And I have a little addendum here where I'll talk about what I would do as far as resets. And then lastly, for the step one, I would say don't take every entry. All right. Be patient and only take the best setups. This is just general trading stuff, but I can definitely see, looking at the data of our traders, that unless there's 8 million great setups a day, people are taking way too many of them. Yeah, Dan is nodding his head.
Well, that's the thing. I think, especially if you are trading a product like the NASDAQ, there's a lot of false signals. There's a lot of movement that you think you can be in. You watch these, 10, 15 handle moves, and yeah, that's great opportunity, but are they methodical 10, 15 handle moves, or are they just sporadic 10, 15 handle moves? And I think that's the difference. And once you spend enough time, you start to recognize where it's sporadic and where it's methodical. And that's going to help, rein in the number of trades you're taking. So really, I think anyone out there trading should set max number of trades, whether you're forced it or you're trying to create better habits in your trading. Because I think we talked about this in the coach's playbook the other day, or maybe I talked about this on the recap. I've talked about it at one point this week. And it really came down to, everyone says, hey, I got A setups, B setups, and C setups, or 1-star, 2-star, 3-star, 3-star the best, A is the best. I never really understand why traders are going to take trades that aren't the best setups. Why put that risk on? When you're taking the best setups, if you have a high probability on those, it's going to allow you to maybe add a little bit of leverage. You're going to have a little bit more confidence in that trade. If you're taking a quote unquote C setup, that probability is not great. Chances are slim here. Why would I take that trade? No, let's focus on those A setups. If you have a max number of trades you're going to take in a day, you're going to be only focused on those A setups. And then everyone loves a big shiny win rate, right? If you have like a 75% win rate, that's a big shiny number people love. I don't think it's the end all be all metric by any means. It's a metric I'm not really that interested in, but it's an exciting metric if it's doing well. And you get to start to look at that. And you guys are flowing in with comments, and I'm really excited about this.
Yeah. Well, while you digest some of those, I'll say, I think just people get antsy, right? Players play, shooters shoot, traders trade. It's like that attitude where you feel like because you're sitting on, you got to be throwing some stuff on, which is not helpful in the long run. Speaking of which, one last thing that is super important for this competition or for traders in general is always set your stops, right? Stick to those. If I was just something like this, I would set my stop, set my target, let it play out unless the market state changes. Have confidence in your A setup. So this is why you don't get into those B or C stuff. Let your strategy play out. And that's the only way you're going to learn whether it's working or not.
Yeah. And that we've got a ton of comments about that. Chris, his first comment here was think about where your stops are, use OCOs. Couldn't agree more with that. Tanya's got a great one too here. Take care of yourself mentally. That mental capital is super important. I think that kind of gets overlooked from a lot of people. So mentally be prepared. It's a stressful thing. I think when you've got a little skin on the line, when there's, a nice token at the end of it, you get a little anxious. You feel like if you're starting to take a loser, you're going to possibly sit in that a little too long if you don't have a plan where your stop's at.
Yeah. So stepping outside the competition for the step one thing, I have a few other notes that I wrote down today. I say, don't Monte Carlo the system by YOLOing and then hitting the reset button. I made a note of like, what's the point of like earning a funded account if you never learn how to trade? Hear me out. I've wondered this. I've never asked this question on here. I just want people to understand, like, is your goal just to pass, or are you trying to learn to trade? And in either case, figure out what the monetary value of a funded account is to you and put that into your reset strategy, right? I mean, if you're just hammering the reset button to try and pass, you'll probably pass at some point. I mean, no one's that wrong, but what are you even, you're spending a lot on reset. What are you even getting? Like, is there this thought that once you get a funded account, suddenly 70 resets, you're just shaking them out and now you're going to be good? I don't understand that mentality.
I think that's something we've actually talked about on the show before. You know, what the purpose of a reset is. It's not to, you know, when you're down to put you, it's not supposed to make you feel better. It's for when you truly have a couple lapses, you've screwed up, you've taken some drawdowns, the strategy is not working. And that's the purpose of the reset, not to be smashing it all the time because you're trying to, you know, YOLO a 15 lot in, you know, in the NASDAQ, and you're trying to get a runner and it rips against you real quick. You hit, because 15 contracts in the NASDAQ, you can lose, hit that daily loss limit really darn quick.
Yeah. Well, also Top sometimes takes smack because they're, people will say, well, why are you charging for resets? We could give a high-minded answer, but our business literally would not work if we had free resets. I mean, I hope people understand that, right? If you could just reset every time you made a bad trade, every single person would pass, and then we would we'd lose more money than AIG or something like that. It would just be it would be wild. But that's part of the reason that they cost money as well. So moving on to step 2, I know this isn't part of the competition, but there's a few other things in case people are listening to this and trying to pass the combine. Step 2, same as step 1, really. Just reread the rules carefully. Make sure you understand the scaling plan and mind the consistency rule. The first thing, just target or calculate 40% of your target, and, you know, don't earn more than that in one day. Get flat. And one last thing that I would not be remiss is just like power scalping. NQ power scalping is not a strategy that's conducive to success in the real markets. And I may get some hate for that, but the proof's in the pudding, man. We see a lot of people pass on a simulator, and we see nobody in a live funded account
I want to
do anything with it.
Give an example of that too. So let's just say for perspective here, what Jack's kind of talking about, there's a lot of traders that'll come through, and I have seen traders do close to 4,000 contracts simple in a day, quick scalping in the NASDAQ. For perspective, the NASDAQ traded 430,000 contracts today. I could probably go and find a trader that in the sim market did 4,000 contracts. That's 1% of the entire NASDAQ volume today. That's an astronomical amount of trade.
It's frankly bonkers. Like, because I know some people have scalping strategies that work. I'm sure they exist, but it's not that, because that's where the simulator doesn't work, right? You're not in real life. You can't trade. A single retail trader cannot trade 1% of the volume in the NQ. Simulators aren't built for that, because they know people, they don't understand why they would use the simulator to trade that way. Right? It just gets distorted. It's not, the simulator is not taking into account how you would push it around, or like what the exact fills were and things like that.
Yeah, you can't click fast enough. I mean, it becomes a crazy number. Chris is asking, just kind of describe this power scalping. And Chris, you know, it's exactly, you're spot on here. 12,000 in fees. You can win and lose a lot really easily. I mean, it gets astronomical how quickly people can trade crazy size in the sim, and they're clicking, buy, sell, buy, sell, buy, sell. It's like they've got the hotkeys on their keyboard, or their mouse is set as a hotkey,
or they're automated.
Or they're automated.
No one will admit it to us, but
yeah.
This
is true. And you're doing things of that nature. And in sim, for sure, it's reasonable, but you're not going to get the fills in the live market. If you look at, you know, depth of market right now in the NASDAQ is on the bid and offer is 2 and 5, right? Not huge. It's a pretty thin market bid offer depth there. If you're working a 5 lot chances are you're not filling all 5 of those when it trades in the live market. Sim might give you better opportunity there. You can see those fills come through. So there's just differences. Totally okay. The sim is a great tool if we use it to help teach ourselves how to trade. I wanted to touch on one because Mogutar has a really good recommendation for anyone too. If you're up more than 3x of your daily loss limit within the first hour, call it a day. Don't let your overconfidence get the better of you and give it back later in the day. That's a great point. Not just being up on the day, but that first hour. How often have traders, I'll tell you, I've done it multiple times myself, where I have been up a ton in that first half hour, 45 minutes to an hour. Then I gave it back. And then I spent the next 2.5 hours trying to recover back to where I was.
Well, they don't move their, I mean, I've done this too. This was a bad habit of mine too. Just size up when you're up like that. You got to have the discipline, I think, to move your limits, give yourself a trailing max at that point. I think you could stop trading. I agree with, was it Mogutar?
Yes.
Totally agree on that. But if you feel like you got the hot hand, you want to keep it, at least if you're up, say $3,000, set a new limit of you're not going to lose more than 1,000. Like you're not going to leave with less than $2,000 or something, or whatever you're comfortable. It depends on what your style is and things like that. But what you don't want to do is what Dan said: don't have a big day and then just give it all back. That's not fun for anyone.
One of the first big days I ever had in my career, I was up really, really good. Multiple 5 figures. I was having a phenomenal day. I was pretty jazzed up. I was getting pats on the back at the desk. It was a really exciting day. Then I decided, the risk manager came up, the boss came up and said, "Hey, why don't you start closing your stuff out? Get out of here, go celebrate, go have a nice day." Someone else will kind of watch your position, keep yourself pretty neutral there. I was like, you know what? I love this idea, but I'm going to give it another half hour or so, and then I'll start peeling off. I kept trading and I gave back a little bit. I gave back a little bit more. I started giving back a lot more, and I gave back majority of that day. Still ended up positive. It still was a quality day P&L wise, but it was the biggest shot to my gut I've ever taken in trading, because I could not just stop. I went on tilt in a sense. I still walked away positive, but I went on tilt in a sense because once I hit that high water mark and I started giving it back, the next trade was not trading because the market told me to, but I was looking to get back to that point again. I was trying to get back to that point, and I kept doing this and I kept trying to push it. And each time I did that, went against me a little more. So instead of trading 5 lots, I was trading 7 lots. Instead of 7, I was trading 10. I was starting to get a little heavier. I was building up. I was trading a little size, and it kept just coming back in my face. I ended up shutting down. And I ended up taking a week off after that because I was not in the right place mentally. So from there, that's when I set up, just Jack, you kind of touched on it, setting those new loss limits. I run 50% rules up to a certain point, then I'll change it to a 75% rule. Like, you got to keep 50% of this at X profit. So let's use 3,000 as a figure here. If I go up 3,000, I got to keep 50% of that. My new loss limit is plus 1,500. That's where I'm going to end my day. Let's say I roll it to, let's call it 4,000. And now I can adjust to a 75% rule. I'm only going to risk 1,000 at that point. I really want to walk away with a minimum of $3,000 here, but I'm going to keep giving myself a chance. I'm sizing down. This is where I start to size down now. The more I grow, the smaller I get, keeping it tighter. Because then if I were sized up at those higher numbers, it's easier to give it back. It's easy to lose that quick grand in one trade. And then you feel like you're chasing.
Yeah, that's great. So that's about the extent of my advice. I was distracted right there because, we're doing this on YouTube, so it's a visual medium. And suddenly after this rainy day, a ray of sunlight came in, and you can just see the reflection in the window of what a mess my condo has become since I was out on paternity leave. I was
going to say something a little bit ago, but I was going to be like, Jack, maybe we should put one of those pictures on the other glass there. We wouldn't see the kitchen counter there.
I will, but you understand, you have a baby, right? And it explodes your house.
I could only imagine.
One of your bedrooms becomes a baby garage full of strollers and stuff like that. You have 19 million things in the counter right there. It's disgusting. I love the Tyke, But at the same time, it is. I feel like I'm never gonna get this place put together again. But I will. I'll throw up another photo up there just to, if you're listening to this on the podcast, it's just, I look like a garbage person. That's fine.
No, it's not that bad. It really doesn't look that bad. And I also really want to say to everyone commenting here, I really do appreciate these comments. I'm going to make sure everyone here at Top Step takes a look at these. We're going to get this. I think we should definitely get this out in a blog as well. You guys have awesome advice here. So really appreciate it. Everyone chiming in. I've read through everyone. I'm not going to have time to touch on each one, but definitely want to say thank you for all these great ideas.
Thanks for stopping by too. And in subsequent weeks too, if you stop by here on Thursday afternoon at 3, we'll probably, maybe crack some barley pops, beers or something like that. Kind of hang out and spend the first half talking about the markets for the week and what we're looking at, and then get to a topic of the day. So come on by, bring your comments. We love them.
Absolutely. And thanks for tuning in, Jack. Thanks for joining the recap. I think this is the new method here for Thursdays. So everyone, thank you for tuning in. Don't forget, John will be back tomorrow morning, 7:45 a.m. Central Time with the market forecast. So that's what. Got anything else, Jack?
Oh, I could say the old podcast. I could say namaste and trade well.
Perfect. Everybody get out there, trade well.